Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, so far the Australian dollar has taken a pause close to the top side resistance around 74.20, and as you can see here, if we just bring this up a little, the market did stab there not so long ago, back in early March. However, let's see if the market does play the similar price action, because if we do see a rise, as the recently seen for the last 3.5 days, is that the RSI could actually give us a little bit of bearish divergence. That means the market will probably reject that level of 74.20 once again, with the MACD relatively weak in terms of how this rally has been respected in front of that support area around 71.30.50 is the downplay. It's getting very close. That is, I feel that the market should pull back towards the low 72 region. But the dollar index, which measures the greenback strength against a basket of 6 major currencies, slightly lower at 98 figure. The euro has managed to push again into the 4th consecutive day and stabs at the level of 111.15. I feel the market at this point is likely to fail, not overly bullish, and with the Fed hiking rates 25 basis points this week and also suggesting or penciling in that another 6 is on the cards for this year, should see a stronger US dollar and a weaker euro in the coming weeks. Therefore, I feel the market eventually will pull away from this top side and look back towards 109. Dollar yen still flirting with the highs around 118.85. It did take a stab above 119 briefly, but did drop quite sharply. In light of the pattern, the market is likely to see a retreat from this level and a bull trap could be set, and therefore look back towards the region of 117. Sterling, well, the Bank of England did hike rates 25 basis points to 0.75, and now with a knee-jerk reaction from the hike, the pound should still continue its upward trek to around 132 area or even in towards 133. The technicals are firming up, so I'm not getting negative at the bottom side here and feel that market should eventually push higher. To a disappointment, sterling Kiwi is backed away from that top side 194 and now back towards the bottom side of the range, seen around 190. I do feel the market should actually rebound from this level, and if so, look back towards that top side target of 194. Interesting pattern here after the hammer was posted from the rejection of 1,900 for gold is the market is struggling around that level of 1,938. Now it is a little bit tricky here, but nevertheless we do not have at this point any positive signals to the recent rally. However, we didn't get a close above 1,938, so I do feel the market may actually take another downward step back towards 1,900. Unless we get a close above 1,948.54, then overall we're pretty much close to the top side of the range. And oil rebounds very aggressively overnight, back above the $100 mark. Therefore, we could see a little squeeze up, that is towards 106, and reassess from there. The RSI is supportive of this move, but the MACD is still somewhat heavy, so it will be a little bit whipsawed. As long as we don't break above 106.40, then I feel the market could easily pull back very sharply. So I still like to see how the market plays into today. Well, that wraps it for the week. Thank you very much for joining me. But please keep an eye out for the intraday report, and I hope you enjoy the great start to the new weekend.